Welcome to Only Finance. It is the 1st of March, pretty late at night, actually, technically the 2nd of March. And this video is made on this backdrop. This is the action we've had over the last couple of days. And you could say that the economic data was priced in, but at the same time, it's not great. And if you look at the weighting of the Magnificent Seven or the Magnificent Four, they're pretty much carrying the market. The reason why I'm making this video is because I was just looking at the news. So obviously the VIX should be going down. And check out these headlines. So first thing that stood out to me, updated March 1st at 9:37 p.m. Eastern Time. Hours, pretty much half a day after the market closed. So this right here is economic fear. Now, what do you think would happen to the markets if that got released, say, here or here or here? It got released on a Friday, 6 hours after the market closed. Okay, next. Inside the crisis at Google. Okay, whatever, some business problems, but look at this picture, and I'm pretty sure the article kind of follows the same palette, if you will, of this picture here. And it discusses AI in not such a positive light. Now, it's not saying that there's anything wrong with AI, but in Google's attempt to test out their Gemini program, there was all kinds of issues. All I'm saying is right now there isn't a ton of information out there about what AI can actually produce. It's more of like a hype train. What I think this is going to do is give another perspective of AI, which could essentially have a negative impact because the less information, the more mysterious it is, the more potential it has. And then as information comes in, we learn about the limitations, and the idea kind of gets, closer to Earth, if that makes sense. So I don't think that this is again, if this came out, I know Google's not leading the way in AI. I know it's like NVIDIA and AMD and whoever else, but it's still part of the AI conversation, a big part. I mean, I think most of us are using Google products. I mean, you're on YouTube right now. That's a Google product, and you know that they're utilizing AI to some degree. So it's part of the conversation. The fact that this was released half an hour before the market closed, it might actually explain some of this right here. That was a 15-minute chart. This is a 5-minute chart. I mean, granted, it is a Friday, but like right here at 2 o'clock, let's see, 3 o'clock. This is 3:30 right here. So right here, the news came out. I mean, I don't know if there's a correlation, but let's keep on moving on. More information. There are growing calls for Google CEO Sundar Pichai to step down. So, I mean, this is obviously more politics, but still, it's tech being called into the light. And then here's this one. Also, an hour and a half after the market closed, the U.S. national debt is rising by $1 trillion about every 100 days. I mean, you could make the case that this is a bit alarmist, and for it to come out on a Friday after hours kind of feels like it might, like if these articles are going to have any kind of negative impact, kind of trapped a bunch of people because people are convinced that the market's just going to all-time highs and it's going to keep going, and it might. But these articles suggest that they were holding it back, especially if you look at the timing. That's really the sneaky side of it. The next one here, war. People get afraid and it creates uncertainty. Typically, when a war breaks out or there's an implication that a war is going to accelerate, it doesn't really spell good things for the stock market. It usually spooks the stock market, depending on whether there are fundamental effects of this war, like with Ukraine and grains and fertilizer and things like that. But U.S. Defense Secretary issues chilling warning on NATO's looming war with Russia. Defense Secretary Lloyd Austin believes a war between NATO and Russia will become inevitable if Ukraine falls and Vladimir Putin is not stopped. I mean, that means that they're essentially, this is like the pretext for actual war. We were in a proxy war up until now, of course, but at the same time, this is more alarmist talk. According to Investopedia, on the topic of how war affects the modern stock market, it talks here about how they often shrug it off. It usually begins and creates a level of uncertainty in the markets. The markets don't like it. It can lead to sell-offs, but at the same time, investors might not just pull their money out of the markets. They might just rotate it to precious metals or bonds or currencies. And according to this, despite the initial negative reaction, stock markets have shown resilience over time. Indeed, they often quickly recover as the situation stabilizes or the scope of the conflict becomes clearer. So, in the context of the war in Ukraine, this proxy war with Russia, this is clearly signaling an escalation. So, if this is accurate, as the situation stabilizes, it's not stabilizing, it's becoming less stable, and the scope of the conflict is going from what we thought was a known quantity to sort of an unknown quantity. It's escalating outside of what I think is a comfort zone for most people. Then this one also stood out to me. U.S. Embassy in Haiti issues alert amid heavy gunfire and traffic disruptions. Again, these articles are coming out much, much later in the day. This came out at 10:30 today. So 6.5 hours after the market closed. I'm going to be watching the news tomorrow to see if things continue to kind of go, follow this narrative. And I wouldn't be surprised, just based on the information that I've reviewed in this video, if Monday the market opens up and it's not a great open, or at the very least it pulls, the market pulls back on Monday. Anyway, let me know what you think. Thanks for watching, and I'll talk to you in the next one.